you could have bought silver 1 year ago. Why did you not buy it?
Silver is breaking the world. In the past 30 days, we have seen it smash past $100 and leaving everyone in the dust.
Why did you short silver? Are you stupid?
Every morning you wake up to more news that silver is higher and you're wondering to yourself, why did I not buy it last year?
Thank you for buying silver so that I can retire early.
But if you have been in this game for long enough, you will know that vertical lines on a chart usually end in two methods: a structural repricing to the moon or a wealth-destroying crash. So let's do a deep dive on the silver market for 2026, covering both the bull market thesis and the bear market thesis, and let's see what we can learn from historical events in the silver market. So let's start with the bull case. Why did silver blow past $110? It is not just inflation, it is an all-out war for silver, and there are 4 points that you absolutely must know. Firstly, silver is the most conductive metal on Earth. So in 2026, the AI boom has shifted from software to infrastructure. Modern data centers are consuming gigawatts of power, and silver is mandatory in high-performance GPUs and data buses. So before you send a thank you and hello to ChatGPT, better think twice because you will send silver to $1,000 per ounce. Secondly, silver is only a byproduct from mining of copper, zinc, lead, and gold. Therefore, the production of silver does not ramp up even if silver is trading at a high price. So even when the demand for silver has went up, the supply is struggling to keep up, thereby creating the supply and demand imbalance. And this imbalance always leads to a higher price. So the simplest analogy is thinking about 100% bidding for one item. Generally, they tend to bid higher and higher, which causes the prices of silver to keep rising. Third, China actually restricted export of silver to only 44 companies and is thereby creating a supply void as well. As the solar and EV industry continues to expand in China, China is protecting their own industries which need silver and yet creating another choke point. Fourth, safe haven demand. When you wake up with news of presidents getting captured, and you wake up and suddenly you are a US citizen, and you wake up again and B-2 bombers are over your head, this political tension creates mistrust in currencies, the central banking system, and causes a drop in the US dollar. This creates a rush for safe haven assets like gold and silver, creating even more demand for silver. But while the bull thesis and the current price is backed by real demand and supply off balances, the bears are screaming at you with technical details and chart. It is also extremely difficult to correctly judge and price what the real value of silver should be, even though real demands exist. So now that we understand what the bulls are saying, let's understand what the bears are saying as well. Number 1. The triple RSI destruction. Historically, any asset with weekly RSI above 70 is overbought. As we sit here in late January 2026, silver's weekly RSI is almost at 90, and we have not seen these levels since 1980s or the 2011 peaks. They often say, history doesn't repeat itself, but it often rhymes. We can see that the only 2 other times the weekly RSI has been at these levels was in 2011, which was followed by a huge crash of around 71 to 72%, and in the 1980s an even larger crash of around 89%. Safe haven, they say it. Buyers at the peak of 1980s took 16,000 days or 46 years to just break even, and buyers in 2011 took 5,000 days or 14 years just to break even. So has another generation of backholders been created on 30th January 2026? I think only time will tell, but let's find out a bit more about what happened in 1980s and 2011 later in the video. Point number 2, the mean reversion. So unlike our weight which only tends to go up, silver is currently working outside the Bollinger Band, and statistics tell us that a mean reversion is inevitable. A simple pullback to the mid Bollinger Band would mean a 30 to 40% crash from here, and a simple pullback on the monthly chart will bring us down at least 60 to 70%. So are you ready for such pullbacks? Point 3, the smart money divergence. So if we take a look at the Community of Trade report, which shows how different group of players are positioned for different commodities, while the prices of silver have gone way up since April 2025, hedge funds or the big boys are actually decreasing their net long positions. So while smart money is selling paper contracts to formal retail buyers, the big whales are swimming away while the price is still rising. Point number 4, playing the casino where the rules change. In the 1980s, 3 brothers actually tried to win against the house. The Hum brothers tried to corner silver, and at a certain point in time, they owned close to 1/3 of the world's deliverable supply of silver. This caused silver to skyrocket from $6 to $50 per ounce. So even your wife's best friend, Tiffany & Co., complained about the sky-high silver prices. But on January 7, 1980, the COMEX adopted Silver Rule 7, which raised margins and even implemented the sell-only trading. You could sell silver, but nobody was allowed to buy new contracts. With no buyers and forced sellers who couldn't meet the new margin requirement, prices plummeted from $50 to $10 in weeks. And again in 2011, CME Group changed the margin requirements for silver futures 5 times in 9 days, once again causing margin calls and forcing speculators to sell, which caused the crash in 2011. This is similar to the GameStop saga, when a general story seems to be pushing prices up with leverage, short sellers cover, price pushes further up, retail FOMOs, price pushes even further, and then you suddenly change the rules. Panic ensues and the price plunges. Retail gets stuck and the general backholders are created. So now that we understand both the bull and the bear theses, what are some of the red flags that we can potentially look out for? Number 1. More margin hikes. So if CME raises margins once again, this is a huge red flag. In fact, as of 31st January 2026, CME has already raised and changed the margin requirements 4 times in 1 month. Number 2. If the buy button disappears, your wealth will probably disappear too. Number 3. If the difference between Shanghai spot price and US paper price disappears, it means that physical demand is also dead. So what is the verdict? Fundamentally, silver may be the most important metal of the decade due to developments in data center, AI, EV and the solar sector. But in the short term, it is extremely difficult to judge what is the fair value of silver. Always remember this statement: those who cannot learn from history are doomed to repeat it. Don't be the biggest winner, but don't be the biggest loser. So what do you think? Is silver headed to 150, or are we about to see a repeat of 2011? Let me know in the comments below, and don't forget to hit the like and subscribe button. Stay safe out there, and I'll see you on the next one. Bye bye!